Hello everyone, welcome to the Ichimoku.co chart of the day. Might start things a little bit different today, just looking at the US dollar Japanese yen and just watching the trend continue along the way. The current candle, the second last candle that has finished trading, is a doji type candle. It has tested through the previous highs, so we did see some strength from the buyers being able to trade up through that area, but they did lose commitment. We see this large shadow on the top of this very small body, suggesting that there has been a significant loss of commitment by the buyers. Now we are trading within that highlighted zone of previous support and resistance, and this is an area where we have seen selling, and strong selling the last time we were there, and moderate amount of selling the time before that within this region. This type of candle suggests that that very solid bullish momentum that the buyers had built has perhaps dried up, although we do need to consider that that previous candle was something of an extreme candle, and we don't tend to see strong follow through after extreme candles. What we're seeing in this new session is the buyers coming back into the market, but that still could be short-lived, because anywhere through to the top of this region around the 112.75 level, we could find some significant price rejection in the market, then being rejected outside of this zone. So net momentum has dried up. That's that move between the open and the close, and it does suggest that the buyers have lost a commitment. And they've also lost control of the market where they had control for the previous day's trading. So not a lot in favour of the buyers. But as always, if we are going to see the sellers come into this market, we want to see confirmation of them coming in, and we're not actually seeing that yet. Confirmation would mean that they would need to trade down through that low, which has found support at the bottom of this highlighted zone, roughly about the 110.84 level. Now, importantly, in terms of Ichimoku, we do still have a negative market in the longer term time frame. We are still trading down below the cloud, although we are mean reverting back towards finding some equilibrium by moving back towards the cloud and satisfying that buying pressure here. It does seem to be letting off, and it does suggest that we have found some sort of momentum. We could see the sellers come in, although there still is an argument for the market moving higher up towards these levels, and eventually over the probably about the start of next week, the cloud will move lower, and the pressure on the market to move higher will be less as we move into the start of next week. In terms of the faster time frames, we still have the market maintaining above the Tenkan indicator, so maintaining above there for about 3 candles now. Does suggest that we may have had a significant change of sentiment in that short-term time frame, and we are now trading above the Kijun-sen, the pink line, suggesting that we do have a bullish market in the medium-term time frame. Looking at the tick span, it's within the corresponding price action, so it's not above, so it's failing to confirm that bullishness in the faster time frames, but it's also now failing to confirm that negative activity in the longer term time frame, and it is suggesting we have a lack of momentum now, whereas it was negative whilst the tick span was down below the price action, so perhaps a switch in sentiment here. Now, just using our Fibonacci extension tool, and here we're examining the relationship of this current first time frame uptrend that the market's been in for some time to the immediate previous first time frame uptrend, and it was just a one candle uptrend. So we had the uptrend there, the downtrend, and now we're in the uptrend. If we look here carefully, we see that the market has traded through the important areas leading up to the 100% level, traded through there in a significant manner, through the 161.8% in a bullish manner, and now we're just testing very close to that 261.8% level around the 111.90 area, and we have seen rejection from there. This does add some weight to the suggestion that there is good potential for a change of trend in that first term time frame to the downside. If we don't see that occur, let's continue to monitor this 261.8% level for continued price rejection, and then we could see the market turn back down, perhaps to find some equilibrium at the Kijun-sen around the 110.14 or 15 level. Then also using the Fibonacci retracement tool, and we're examining the relationship of the current first time frame uptrend to the immediate previous first time frame downtrend, and we see that we've retraced exactly to 100%, just poking through there. The rejection from there has been strong, and this also adds weight to the argument that there is very strong potential for a confirmed change of trend in the next session or the one after, with the market to potentially make a lower high and a lower low. Now moving over to our bands next with dollar yen, and here we see we've had a retracement back up towards that upper band. This suggests that that very strong negative tone that we had here previously in the market, where we were trading down below that lower band, has ended, and there is potential for this market to potentially transition into an uptrending phase. Importantly, however, is the resistance around the top band, and we see from the previous 2 days the market has been able to close above there, and we've had the market testing through there and being rejected from above the band. Now, this suggests that there is some bullishness by trading above the middle of the bands, but certainly not strong at the moment, not strong enough to see this market continue trending further to the upside. What we want to see, if we are going to see further uptrending activity, would be a strong bullish breakout, strong bullish follow through, and the market closing up above some of these swing highs, initially the 111.60 area, and then the next would be quite important around the 112.21 region. But the way that we've been moving here, this suggests that we could be starting to transition into that uptrending phase where we don't have that negative trading down below the bands. We test up to the upper band, we may retrace and find support either at the middle of the bands around 110 or down, get close to the lower band around the 109 level, and the buyers return. We could eventually see that breakout to the upside. Now, there's no guarantee of that occurring. We're always guided by how the market reacts outside of the band. So if the breakout is to the upside, strong bullish breakout with the buyers in control and showing strength with strong follow through to the upside, or if it's to the downside, strong negative breakout with strong follow through and some of the swing highs or swing lows being taken out. Now, just looking at the Hikanashi candles here with dollar yen, and once we've been in this uptrend, and we had the market transition away from this small black body candle with the size of the white bodies getting larger with no shadow on the top, it did suggest that there was a significant buyer strength coming into this market. And this second last candle on the chart here, that's the one that has completed trading. That last one is still completing, but it is quite a significant candle, and it is a fairly similar size to these previous candles. We know that Hikanashi are a combination of two candles, so there is something of a lag, but it certainly is suggesting that we do just need to be patient and look for much weaker type of candles before we're convinced on just a slightly longer term basis than what we're looking at with raw candles that we are going to see any significant downtrending activity. This still suggests that there is still some underlying strength of the buyers at the moment.